Week it was you, or the week before.
This is Financially Fit Radio with Cory Sickles from Safe Harbor Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Cory provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Financially Fit Radio with Cory Sickles.
Welcome back to another episode of Financially Fit Radio. I'm Cory Sickles with Safe Harbor Retirement Group and Wealth Advisors. If you have any questions about today's show, feel free to give us a call at 614-760-0670, or you can always visit us online at safeharboroh.com. And while you're visiting our website, feel free to check out our radio page. You can listen to previous episodes, and you can also subscribe to our podcast at Apple Podcast, Amazon Music, Google Podcast, or Spotify. Also, you can watch today's show on our YouTube channel. Just type in Safe Harbor Retirement Group. You can watch previous Financially Fit radio shows, and you can also subscribe and keep up to date with our video shorts. We're putting about 3 or 4 video shorts out a week about different types of financial topics, just trying to be able to educate you on different things. Again, just remember, when you schedule a meeting with us, every meeting's complimentary. There's no financial obligation. We're here to help to make sure that you have the retirement that you want. And again, our phone number is 614-760-0670. Or again, you can always visit us online at safeharboroh.com. You know, one of the things that I have a lot of discussions with clients about is, what could I have done? You know, what could I have actually done to have a better retirement or plan to have a better retirement? And today we're going to kind of talk about what those regrets are. And here's the biggest part about it, is how you can avoid them, or what you can do to make sure that you are not going to have any financial regrets heading into retirement. But before we dive into that, let me introduce to you my co-host this week and every week, and that's Tony Shore. Tony, how are you today?
Well, I am doing fantastic. I've had a great week. Cory, thanks for having me on the show. This sounds like a good topic you've got for us today, and I'm anxious to get into that. But I have to tell you, it's been a good week. You know, last week we had Labor Day, a 3-day weekend. I hit the Minnesota State Fair really hard.
Oh, yeah.
And that was a lot of fun.
Second largest in the U.S., right?
Yeah. In fact, they set the record for biggest one-day attendance. 256,000 people last Sunday attended the Minnesota State Fair, or a couple Sundays ago now. But
how many funnel cakes they sell there and pizzas?
It's a lot. And they sell deep fried Twinkies. That's right.
Deep fried Twinkies.
Battered and deep fried Twinkies. Now, Cory, I had a deep fried Twinkie, and the fun thing about those is you can actually feel your arteries harden as you
I'm sure. You can deep fry anything and they're good.
Right. Snickers bars. They deep fry. Yeah. Cheese curds. Awesome. Great stuff. But pork chop on a stick. There's so many things. They had key lime pie beer there. I thought it would be terrible. I took a sip. Tasted fantastic.
Wasn't too sweet?
What?
Wasn't too sweet?
You know what? Not too bad. It tasted really good. Like one, you couldn't have more than like a half a glass or a full glass at most.
Yeah.
They also have mini donut beer there. It's pretty good.
Yeah.
The state fair is crazy, but the Minnesota State Fair is the second largest, only because the Texas State Fair is longer. It's 2 weeks instead of a week and a half. So, but it's healthy eating at the state fair. So
always is.
I went a couple of times, ate pretty healthy. How about you? What have you been up to?
Well, I did not go to the Ohio State Fair this year.
Oh,
but I've been in the past.
Sure.
This is for me, this is where it really starts to get busy from the business standpoint.
Yeah.
And also I have some trips coming up. Just I'm normally have a couple trips in September anyway. And then I have one in October as well. So so for me, it's really, this is really a busy, the next 60 days are really busy for me. And
Yeah.
then, after that, Tony, then we also then have, Medicare and the annual enrollment taking place. And
Yep.
it's just going to get a lot busier. And I'm sure there's going to be a lot of clients or prospects that I'm not aware of that will want to say they want to retire in the next, around January to February of next year too.
Yeah.
So just kind of like the way it is. But yeah, it's busy. Football season's here. It's hard to believe, but
NFL has officially started.
Yep.
We've had a few games, and great. Yeah, I'm excited about the season.
Yeah. So we have football. The Buckeyes look. They don't play anybody till week 4 anyway. But so yeah, so it's busy. But let's kind of talk about today, right?
Yeah.
It's just so sometimes even when you talk to your grandparents, or even if you talk to your parents, they always are going to say, I wish I would have done, did this.
Yep.
I wish I would have did this or did that, or who knows what that is. It might not just be about financial, just about everyday living, right? And if we could actually kind of learn from the past, right? I mean, you're going to be in a better situation if you can kind of learn from your mistakes. And I know a lot of people out there have probably have had some bad advisors or bad financial advice, and they have a bad taste in their mouth of maybe working with an advisor or going through that type of process. But it's all about finding the right fit for you. And you're not going to know whether someone's a good fit for you until you probably kind of go through that process to interview a few financial advisors, and which I do highly recommend, because it's so much about having the right type of philosophy. You need to have the same philosophy, and you just need to feel comfortable, because if you're going to give a lot of money to someone to manage and work with, you have to trust them. And it takes time sometimes to build, but a lot of times most people have a good most people can probably judge someone pretty quick on whether or not you're going to have that type of relationship. So I would highly recommend, I think one of the biggest regrets on there is probably not getting enough financial advice in general, Tony, but, not consulting a financial advisor sooner.
Yeah.
Right.
Not working with a financial professional like yourself has got to be a huge regret. I wish I had known you a lot sooner, Cory.
Yeah.
That would have been very helpful. And you're saying your parents or grandparents, I say things like, man, if I had only, when I was 21, started contributing money into a Roth IRA, I wish I had started then,
Exactly right. And the way I look at it is by working with an advisor, in my case, like even us, this is something that we do day in and day out, right? So our goal is to be able to work with you, put together a solid plan to make sure when you can retire comfortably, right? But we also are going to be able to probably show you some blind spots that your overall plan, or you haven't even thought about, in order to have that retirement that everybody does want. Now, obviously, I think what a lot of people are going to regret more than anything else is, did I save enough in order to have the retirement that I want, right? And you can read all the articles out there, Tony, of how small the average 401k balance is for the average American out there, or especially for like a lot of the baby boomers out there. But what people don't realize is you're going to need more than just Social Security.
Yeah.
Right. Because if you're only making $20,000 to $30,000 a year, that's not going to be able to keep up with that. To keep up with inflation, to be able to keep up with the expenses, and just to be able to keep up with the way that you want to be able to live. So you have to be able to save. And there's not too many people out there that said, I saved enough. I have people that have done a great job of saving, $1 million, $2, $3 million worth of assets, and they're still worried about running out of money.
Yeah.
Right. Yeah. So the whole point of this is save as much as you possibly can, because it's going to make it a lot easier for you to be able to have the lifestyle that you want in retirement. So
yeah, not saving enough has to be one of the most common things people say. I wish I had saved more. You hear that a lot, don't you, as a financial advisor?
I hear that all the time, right?
Yeah.
But, saving and then spending kind of go together, right? And I don't think a lot of people know what they really spend. So it's kind of like, it's kind of like I got to find, I got to find a number in order to see whether I can live off of. Wouldn't it be nice if you could sit there and say, this is what I need, then we can build a plan and show you, you know what, this is what you're going to have, and you're not going to have any type of issue. But a lot of times what happens is they come in and say, this is the number I need, and we have to tell them whether or not they're going to have enough assets to make that number actually work. So by coming into us earlier, we can build a plan. And that might mean, and I know a lot of people don't want to hear this, but you might have to work a 1 year or 2 years longer, or we might be able to tell you can retire today. But until you go through the process, you're not going to be able to know that. But it's so important to be able to know where all your money's going and what you truly are going to need in retirement. And I think that's one of the things that I think people, kind of regret is they don't know what to spend, or they don't know what their budget is, and they spend too much. That's really where it comes down to, Tony. If you don't have a budget and all of a sudden you're retired, what do we say every day? Every day is a Saturday.
Yeah. Every day in retirement is a Saturday. And that's when you spend the most.
And that's the week. The weekend is when you spend your most money. So you don't want to be in a situation where you're overspending, and then you have that discussion with your advisor a few years later and say, man, you got to pull back because you're going to run out of money. Mm-hmm. So have a budget, save enough. And then I think another big one, and we talk about this all the time too, is don't go into retirement with a lot of debt.
Oh, yeah, that's a problem a lot of people have, whether it's credit card debt or other types of debt. You need to try to eliminate as much as you can, and especially the bad debt, like credit card, right? I mean, credit card debt and bad debt, right?
And I know a lot of clients out there, Tony, that have, they have student debt from their kids,
student loans. Yeah.
Those aren't going to, maybe you can get it forgiven. But most of my clients do not seem like they do have gotten it forgiven, which means they're going to have this monthly payment for forever. And if you're paying $500 or $600 a month, I mean, that's a lot of other spending that you could actually do somewhere else, right? If you didn't have to pay that student loan, that's $600 that you could spend doing something else, which is probably going to make you happy because you're going to be doing something that you want to be able to do, or spending it the way that you want to spend it. So, go into debt without, you don't want to have any debt going into retirement. In an ideal situation, maybe you have a mortgage, but you do not want to be having credit card debt, student debt, or any other type of debt that's not something that you really physically own.
Yeah. Yeah, that's a great point. And just regardless, obviously, whether you're in retirement or not, you got to get out of debt and hopefully do it before you retire. That's a big one.
It is. And when we start talking about income planning and all this type of thing, I think another mindset that people have is they think, oh, I retire, I take Social Security. Right? That's what everyone thinks.
Yep.
Well, I want to retire at 65. Well, in our plan, you're not going to take Social Security maybe until 67. And I think one of the biggest common mistakes that people make, especially if they're not working with an advisor, is they take Social Security too early.
Yeah.
Right?
A lot of people take it at 62 because they can. And then even people who are going to keep working longer.
Well, that's a whole different discussion, right, Tony?
Yeah. Yeah.
Yeah. I mean, if you're taking it at 62 and you're working, there's a good chance you're losing a lot of your benefits because you're making too much money.
Yeah.
So before you trigger Social Security, sit down with an advisor to make sure you're doing it. You only get one shot at it, right? Do it the right way.
Yeah.
Because it means so much more. Instead, by delaying, instead of you getting $1,000 a month, you're getting $1,600 a month. That's a big number.
Yeah, that adds up over the course of your retirement,
and then it's going to increase by 2 or 3% a year, for example. I mean, you'd rather have that 2% increase on $1,600 than you would on $1,000.
Yeah.
Right.
Yeah.
So
you have to do all the different calculations, and I know you have software that does that, but filing too early is a regret that a lot of people have. I know a guy, one of my best friends who's older. He is a neighbor. He retired. He took it he didn't retire, but he took his Social Security at 62, locked in a low amount. Then he didn't get the full thing then anyway, because he was making too much money. And so he regrets that. I know a lot of people that wish they had waited to file for Social Security.
Everyone always says, "Well, I want my money because I put all that money into it."
Yeah.
Right? That's usually what they'll end up saying. And then they say, "Well, I talked to my neighbor, I talked to my father-in-law or my father, and he told me to take it as soon as I could." Right?
Yeah.
What kind of numbers do they run? Right? And here's the one part about it. I don't care when you take Social Security, Tony, the break-even point is going to be around 79, 80. Right? All that means is if you wake up at 80, then you better have taken your Social Security at 70 because now you're losing money.
Yep.
Some serious money.
Yeah.
And, and look at your case, right? Your father's what, 80?
Yeah, my father's 81, my grandfather, and he's still walking around driving. He shouldn't be driving, but and then my grandfather lived to 101, and two of my aunts lived until 103. So
if you told me that, Tony, I'd probably be telling you, you got you have longevity in your family.
Yeah.
So you need to be closer to 70 than you do 62.
They didn't eat as much pizza as I do, so that might be taking off a few years, Corey, as I've said in the past.
That could be, right?
Right.
That could be.
Seriously, taking it too early, that's a big one. What's another financial regret that you've heard that people have?
Well, there's two things that we talk about on the show a lot. And the first one I'm going to talk about is healthcare.
Yep.
Right? Healthcare it's just expensive. And it's going to get more and more expensive, right?
Yep.
And where's that money going to come from? It's going to come from whatever you saved. Now, there's things out there that you can go out and you can purchase or you can put money into that's going to help pay for some of those costs, right? But I'm thinking more of assisted living or if you go into nursing care or that type of stuff. But just medical in general is going to keep going up. Whether it's your Medicare Part B or your supplement insurance, it's going to keep going up, which means you got to make sure that your income on an annual basis is going up as well. But healthcare is it's so expensive, and it's one of the biggest things that can wipe out your savings, and it could also wipe out a huge income later on for the living spouse if your spouse outlives you, right? Because she's going to now have less assets because you spent a lot of the money on the health care. So don't underestimate that. No one likes buying insurance, right? Whether it's life insurance or whether it's homeowners insurance or whether it's auto insurance or whatever it is, no one likes buying it until you need it, right?
Yes, exactly. Yeah,
and a lot of people don't see. You might go years and years where you don't actually need it, right? But odds are there will become a day where you do need it, and you just want to. That's what you've paid all those premiums for. So I'd highly recommend you sit down with an advisor, find out what options are out there that's going to be able to benefit you or help you in case you have to have all of a sudden have an extreme expense, for your health care.
Yeah, healthcare costs, like you said, they're not getting any cheaper, and you have to have a plan in place to deal with them. Medicare isn't going to cover everything, and even with Medicare, there's still premiums, deductibles, and copays, and I think a lot of people don't realize that. So what's something else? What's another regret that we should know about or be ready for and plan ahead for?
Well, I mean, you really can't, talk about retirement unless you talk about taxes.
Yep, that's true.
Correct.
You have to have a tax plan for your money. And
I think what a lot of people always have a tough time thinking about, Tony, is how much taxes am I truly going to pay in retirement?
Yeah.
The earlier that you work with an advisor, the easier it might be to put together a tax plan for you. If you come to an advisor late in the game, then we can put together a tax plan, but it's going to be from this point forward, right? It's kind of how do we maneuver things around to give you the income you need, but also create potentially some type of tax-free income or lower tax bracket for you later on in life, right?
And there are at least a couple great ways that you can have strategies you can use to have tax-free income in retirement. I know that you do that for your clients, right?
Yeah. I mean, there's definitely, I mean, whether you want to convert money from an IRA to a Roth, or whether you want to put it into some type of maybe even a Roth type of an annuity, or whether you want to put it into life insurance that can give you income back tax free. There's a lot of different types of options out there.
Sure.
But, and again, you just need to come in and sit down with an advisor to be able to do that. I mean, we talk about it all the day, all the time on the show. If you have $1,000, not $1,000, but if you have $1 million IRA or 401k, you really don't have $1 million.
No.
Right? If you're in a 20% tax bracket, right there, you only have 800,000. 200,000 of it's going to go to Uncle Sam. Right?
Yikes.
So and if you actually don't do it the right way, Tony, that number is going to be bigger because your portfolio is probably going to grow.
Yeah.
And you're going to pay more taxes, or down the line, your heirs are going to pay more taxes as well. So, again, it's just something that it's a huge part of being able to make sure you have a successful plan. And that is how can I actually pay the lowest amount of taxes and still have the income I need? And if something happens to me, how can I pass that on in the most tax efficient way to my spouse or to my heirs?
Yeah.
Right. So taxes always come up. Healthcare always comes up, and all this type of stuff. And another thing I think everyone needs to look at. This is probably one of the biggest regrets, is they come in and everyone's always probably a little bit more aggressive than they actually think they are within their portfolio.
Right. The people think, oh, I'm pretty conservative, or I don't like a lot of risk. But then you look at where they're at, you run the reports and see where they're at, and they are at risk, right?
That's exactly right. I mean, everyone's nervous about, we have an election year, right, Tony? Everyone's nervous about it. You don't get out of the market, right? You don't. We've talked about it on the show so many times. It's not, you don't try to time the market. It's, it's really how long you're going to be in the market, right?
Mm-hmm.
That's how you make your return. But the key is to make sure you're allocated the way you really should be based upon your risk level. So it's so important to be able to do like our risk analysis that we do for our clients to make sure that your assets reflect how you truly want to be able to invest, and make sure you have that type of risk component. Naturally, as you age, you're going to get more conservative. It's just the way it is. You go from growth to conservative, and you want to preserve it because now you're going to be taking money out of that for income. So it's so important. This is a great time to be able to do it right now before the election, is to make sure you're allocated the correct way. I'm going to have an episode, Tony. We might have an episode or two just talking about the election. But
good idea.
But it's something that I think that we truly want our clients to be diversified, to make sure that they can handle the ups and downs of the market, because they're going to happen as long as we all live.
Yeah. Yeah, I think obviously that's going to happen, but not working with a financial advisor and diversifying your investments, that's a big one.
It is. It's huge. And, that kind of leads into our last topic I kind of want to talk about here real briefly, Tony. And that is everyone always thinks it's not going to happen to me, right? And what I mean by that is they don't have a will or a trust or their estate in order. We never know when our day's coming. We never do.
We always put it off and think we've got plenty of time.
Right. I'm 55, hopefully I live a lot longer, but something can happen to me tomorrow.
Yeah.
Right. And the only thing I want to make sure of is my wife's taken care of. And then if something would happen to both of us, then I just want to make sure it goes where I want it to go. Right.
Right.
So you need to have a will. You need to have a trust in place. You need to make sure that you sit down with an advisor so we can go over all your different types of beneficiaries, but don't have any regrets. Obviously, if something happens to me, I'm not going to know what took place. Right. But my wife might be regretting that I didn't do this or I didn't do that, because now she's living in the mess.
Mm-hmm.
Right. So just take care of your estate. The best time to do it is when you're healthy, and you can always change it, but at least put it down in writing the way you want it today.
Yeah. Yeah. Get it in writing and work. And the bottom line is, one regret people have is not working with somebody like yourself. So before we go, let our listeners know how they can get a hold of you.
Yeah, just give us a call at 614-760-0670, or you can always visit us online at safeharboroh.com. And just remember, all meetings are complimentary. There's no financial obligation. We're here to truly help you. And the best way to do that is to set up a complimentary meeting with us. We can talk about, we want to make sure that you have no regrets on your retirement plan. And the best way to make sure of that is to have a financial plan in place today.
All right. Thanks, Cory. And listeners, that does it for today's episode of Financially Fit Radio with our host, Cory Sickles. Thank you for listening to Financially Fit Radio. Don't pay too much for taxes or retire without a sound income plan. For more information, contact Cory Sickles at Safe Harbor Retirement Group. Call 614-760-0670 or visit their website at financiallyfitoh.com.
All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.